Hi friends, good morning. Let us discuss about types of collaterals that we come across in our banking industry. So, first of all, what is an ideal collateral? It need to be saleable. If it is not saleable, what is the purpose of holding it? And it also need to be transferable, and it should have ascertainable value. Say for example, if some person come out with a glass item, so for you it is a glass item, somebody others it is a stone. For a gemologist it might be a diamond, but we can't ascertain the exact value, and the value is highly fluctuating from person to person. So such thing, that's why diamonds generally not a regular collateral, but gold is very regular. So collateral should be easily ascertainable, sale value should be there, as well as less fluctuations should be there. So primary security is the one on which advance is provided. Collateral security is the additional security that we insist upon. So the main and basic security is immovable property. So land, buildings, all this. It is for very obvious reason. It is the first property that man started to consider, one of the first property. So we have to take good, valid, marketable title or property is required. If we such things only should be taken, and it need to be free from any encumbrance or legal litigations. If there is a legal litigation, if we take it a collateral, it takes years together to realize. So the borrower generally avoid paying loans. So unnecessarily we are taking that. So if the loan is below 10 lakhs, we need to go to court. If it is more than 10 lakhs, we can go to DRT. So if we created a interest on that property under surface E, then you can sell it, as simple as that. It is already discussed in Surface Act. We need to observe EC documents and tax receipts to ascertain whether it is his own or not. And if it is in the name of minor, and if there is any, that means there are any expenses to be met for the purpose of minor, then we need to take the permission of court before granting a loan. We can't go ahead without court permission. If it is a joint stock company, to find out if any charge on property, we have to take the search report. If it is under lease, that means if the borrower gave it for lease to anybody, first we have to go through properties of lease, that means the lease document, because some lease documents mention it like it is on lease for 99 years. So who will see, who will be live after 99 years? So we can't see. So it is very difficult to take possession. Even after taking possession, we can't evacuate the person who is already under occupation. So that is a criticality. So we just need to avoid such things. Then goods, these are better collateral when compared to, but there is high chance of fraud. We need to be very careful. We need to verify who is the rightful owner of those goods. So for that purpose, generally we check invoice, and we need to check age and demand for goods. If there is no demand in the outside market, all we need to do is hold to those goods, dreaming for the repay of the loan. So and aged goods also sometimes out fashion, but be aware, it depends on goods to goods. For example, wine is of huge cost once it is aged. So it depends on goods to goods. We should not give advance to for the speculative purpose. Say for example, at this point of time, as of corona outbreak, the price of these masks as well as sanitizers went skyrocketing. So if a person purchases few goods, and after if we give more loan, he purchases some more goods, that will create scarcity in the market, and once the demand collapses, the business itself collapses. So we should not give for such acts. Then borrower should be in trade. That means a trader of oil can get a loan on oil only. A trader of soaps can get a loan on soaps only. So what he is trading in, we can give loan on that item only, not on any item. and these goods need to be verified once in a month, and we have to verify purchase record, sales register, stock register, tax register, whatever possible. And while giving loan, we need to consider either of these value at cost or market price, but the best practice is lowest of these two. And at the time of default, if the goods are under hypothecation, we can sell them according to Surface Act. If they are pledged to us by giving a proper notice, we can sell them according to Contract Act. Then document of title to goods. This is much more easier when compared to goods. The transfer and formalities are very less, but there is a high chance of fraud. So these document of title to goods to be transferable by endorsement or delivery of document. So example is bill of landing, railway receipt, dock warrant, warehouse keeper certificate, etc. So there is every chance of fraud. How? They can change the number of goods. They can forge the document, manipulate, forge, anything is possible. So we need to be very careful. And one more thing is, non-paid goods can be taken back or can be stopped in transit by the seller. So we have to notice the interest, our interest to the seller beforehand. That means we have to notice him in advance, so that if he have any objections, he will let us know, so that we don't give a loan. That means if he already have interest, he is not paid in full, he will let us know and we won't give loan. So by that way we can escape from this. Then insurance policies. These are generally these loans are given our surrender value. These policies should be in force and premium should be paid up to date. Okay, unpaid premium policies generally collapse, so we have to see that premium paid up to date, and we have to accept only original, fully duly signed and stamped papers only, not xerox, photocopies. All these are not accepted, and these should be free of any restrictive clauses. If there are restrictive clauses, we will lose our interest. And generally not accepted policies are child endowment, child deferred policy, nominated and fall under Women Property Act. So we should not touch property of child or women. And the policies that are taken for special purpose such as estate duty, etc. Then coming to shares, first and foremost important thing is we should not finance for speculative purpose, particularly in case of shares. And we can give DL or OD loan, and we cannot give for private limited companies. We can give only for public limited companies. Why? Because public limited companies have more transparency and private limited companies have less transparency, and there is every chance of high riskiness in case of private limited companies. When giving loan, banks have some limits. Bank can't have share in any company more than 30% of that company's paid up capital. Say for example, I have X company of 100 crores. Bank can't give loan to 40 crores value of shares. Okay. So 30% paid up capital of company. Say for example, bank gave loan on Google. If bank gave loan of 10% of Google shares, that will be more than net worth. That means total paid up capital plus reserve of any bank in India. So we can't go to such extent also. So it is minimum either that bank need to meet these two criteria: below 30% paid up capital of company and below 30% paid up capital at reserve of bank. And maximum 10 lakh loan for physical shares, 20 lakh loan for demat farm shares. And in case of IPO, maximum 10 lakh per individual. In case of own shares, now SBI giving shares to its own employees, SBI card IPO. So there it can give up to 20 lakh limit and 90% of and 20 lakh limit. To stockbrokers, bank can give loan up to 40% of net worth of previous year. Then on book debts, yeah, we already discussed in factoring for and forfeiting can be OD and CC against hypothecation of book debts. Then term deposit, 90% we can give. It's the most secure because he already gave money to us. He took a term deposit and he again taking a loan, so we get margin. At the same time, we are giving his money to him only, so it's a double advantage. Okay, and we can't give this loan if we are if the deposit is the name of a buyer. That's one more thing. Then if the guardian gave a undertaking that the loan is for the purpose of minor only, then based on that undertaking we can give the loan. Then gold, it is very common in our banking scenario. Gold, it is highly secure, generally pledged. So for a considering value, we take 22 carat gold for preceding 30 days price. So it is released by Billion Association. So out of that we give 75% as loan. So last month prices we generally consider, and out of that 75%. If gold is of inferior quality like 18%, 16k, 18k, then we make necessary adjustments for that. And one more thing, we can't give against pure or bullion gold. That means 24 carats gold. That is pure gold. We can't make ornaments with pure gold. That's why whenever any person come with a biscuit or gold stick, we generally ask them to make a ring and get back to us. Then on closure, based on general line, we can retain gold up to payment of other loans. My sincere advice is just tell them it is before they pay for the gold loan, because gold is somewhat sentimental. If you do this, you might face not from law, personal disturbance. They will disturb you forever. And part release of gold loan is accepted. Finally, we have supply bills. In our country, contracts are very common form, so they generally do the work beforehand and they get paid later. It is very common. So these are highly unsecured payments. So bankers should be very careful in these cases. So generally, we finance interim bills. They constitute up to 80 to 85%. And in case of final bill that constitute 15 to 20%, we generally avoid because they might take years together to get paid. So if there are any comments or advices on your end, please drop a message. Have a great day. Thank you.